All right, ladies and gentlemen, we are coming live from our Joburg office. Good morning and welcome back to the opening bell with myself, Tshepo and Ashley. And this is brought to you by TD Markets and TD Markets Academy every Mondays to Fridays at 9, streaming live on YouTube. I trust and hope everyone had a good Youth Day yesterday, June 16. And yeah, we are back to business now. All right, so this week, guys, this morning, a lot is happening. A lot has already happened. I'm going to add on to what Ash said on Monday with regards to the peace deal between the US and Iran. I mean, it's all over the news. Both representatives have confirmed, right? Representatives from the US as well as Iran have confirmed a peace deal between the two nations, all right? And as a result, the Strait of Hormuz is expected to open, and they said it's going to be fully open this coming Friday. And also what we know about that is it's going to take a bit of time for trade to go back to normal. It's going to take a bit of time for trade to go back to normal. So that is what, what caught or what made headlines this week. Another thing that's making headlines specifically today is the Fed interest rates. The Reserve Bank of or rather the Federal Reserve, they are announcing their interest rates later on tonight. I believe is at 8 p.m. South African time. All right. So that is what we're going to talk about. The US interest rates. That is what we're going to talk about. All right. So what is the focus? What preview can we get? And what can we watch out for? So the Federal Reserve is widely expected to keep interest rates unchanged at this meeting. With recent U.S. economic data remaining resilient and inflation still above the Fed's target, markets are increasingly questioning whether there will be any rate cuts this year. Right? So while the rate decision is important, traders should focus on these three key areas. The first one is the statement itself, the FOMC statement itself. They should focus on any changes in the Fed's language on inflation, economic growth, or future policy direction. That's the first thing, all right? The second thing is the dot plot. Does the Fed still project one rate cut in 2026, or do policymakers now shifting towards no rate cuts, right? That is the second thing. The third thing, which is going to be the center of attention, is Kevin Warsh's press conference, all right? There's a new Fed chair. You guys know I've been talking about this in the recent episodes of the opening bell. The new Fed chair, Kevin Warsh, this will be his first press conference. All right. This is his first FOMC meeting as a chair, making his tone. So his tone and guidance is going to be very important. Right. Markets will be listening for clues on inflation, interest rates, and overall the outlook for the US economy. So with that in mind, right, markets will be focusing on or rather the market focuses this, right? So from the FOMC statement, from the press conference, by the way, happens 30 minutes after the actual release. All right. So you would find the release is at 8 p.m. and the FOMC will be 30 minutes after that. So it's important to also watch the press conference to listen in, more especially since this is the Fed Kevin Warsh's first press conference. His tone and guidance will be very important, right? Will be very important. So a more hawkish Fed is likely to support the US dollar, push treasury yields higher, and weigh on the dollar. So if we get a tone that the Fed is hawkish, that is going to support the US dollar. The US dollar is likely going to strengthen. Yields will most likely push higher, and then that's going to weigh on gold. Then we might see gold pushing down, right? But a more dovish tone could weaken the US dollar and support gold. So, we know that Kevin Warsh is more hawkish than dovish, right? He prefers lower interest rates and all of that. So he's more hawkish. So it's going to be interesting to see with this meeting what's going to happen. And one other important thing to note here, guys, is that what's happening right now, besides the Middle East conflict, right, besides all the other things that have been happening, what's happening right now is the market is already pricing in, or has already priced in a no cut, has already priced in a pause, right? So if you're anticipating any strong movement, reaction, and then you see none of that happening, it is because the market has already priced in that possibility of a no cut. So just keep that at the back of your mind when you look at the charts today, tonight, and even tomorrow, right? This whole week, that the market has already priced in that outcome of no cuts, no hike, but a pause. All right. So looking at the charts here this morning, we have gold, we have silver, and then we're going to have a look at oil, right? I'm going to add on to what Ash said on Monday regarding oil, right? In fact, let's start with oil. So when you look at the oil market, guys, right, it has aggressively dropped. All right, it has aggressively dropped. On Monday, we spoke about a move towards the downside on oil, right? And then on the daily time frame, what you will notice, if you take a look at the left hand side, you will notice that there's a gap. There's a gap that formed in Feb, right? Just before the war started. There's a gap that formed in around Feb, from $67 per barrel there. So now the technicals here simply suggest that price, right, according to obviously the current price action we have, there's a higher probability that there is still going to be a push towards the downside to go back to this gap, to go back and close this gap. So we can use this gap as a possible target. And then from there, we will then take it from there, right? We'll then see what price is doing. So obviously right now, as we can see, the weekly candlestick is very aggressive. It's going back down there. And on the lower time frame, you are going to see trends, right? Like on the 1 hour time frame. So the focus here is basically, obviously the trend, this is the trend going down, right? So the focus here is basically waiting for opportunity, waiting for corrections, right? So once price corrects, that's an opportunity towards the downside. We can see here there was a bit of a correction that formed, market pushed down. So that will be the focus. So the next time the market corrects, obviously we're looking for price to push towards the downside. All right. So that is our take on the US oil. And then you look at silver. Silver, very interesting. Gold, very interesting what it's doing. Silver, we expecting silver to push up to at least $72 per barrel, right? $72 per barrel. We're anticipating silver to push up to $72 per barrel. And looking at the lower time frames, there is a correction that's forming here. There is a correction that's forming here. All right. So a break, a continuation here. We're anticipating price to head over to, or to head to $72 per barrel, right? Simple technicals. And then gold, look at what gold did, right? I spoke about this area on gold, right? I spoke about this area that, when gold was going down, I mentioned on the opening bell that gold is coming back to 4,100, but it's most likely going to break that area. It's going to break that area and, create a new low, right? So this is where I highlighted that gold is most likely going to come back down to the zone. And then I remember someone asked me why specifically this area? Well, it's because that is where liquidity was. Right? So when gold was going down, it was going down to grab liquidity around the zone and then push towards the upside. Look at what's happening right now. All right. So that $4,100 per ounce on gold, that's where liquidity was hanging, and obviously lower than that. So the market grabbed liquidity and then pushed up. And it so happened that it was in line with the fundamentals, which makes it a higher probable trade. All right. So gold is already pushing up. So the near-term target for us is 4,430. Let's say 4,430. So the near-term target for us is around this area. Around that area, right? Which is around the level of 4,430. So any pullbacks, any retracements from this area, from where gold is, right? Any corrections, we anticipating price to push towards the upside, right? And head over to that zone. So that is how gold is looking. All right. So ladies and gentlemen, this is what's making headlines today, right? FOMC interest rates, US interest rates. So let's watch out for that. And then we will discuss what's going to happen after that. Right. So this is the morning's opening bell. Hope you guys enjoyed. Hope you guys learned. And remember, the information discussed in this session is not advice. All right. The information discussed in this session is not advice. So, ladies and gentlemen, that's it from us. The opening bell on a Wednesday midweek market update. We'll catch you guys back again tomorrow. Same time, same place. Don't miss out. And good luck for the day. Cheers, everyone. Have a good one.